Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and the Pi cycle top indicator. If you guys like the content, please subscribe to the channel, give the video a thumbs up. Also check out the Telegram channel, which you can find a link to in the description below. I believe this indicator was created by Phillip Swift, so shout out to Phillip. We're just going to be looking at this indicator because I've been getting a lot of requests from people to look at it. Okay, so the general idea before we jump into this new model that we have not discussed on the channel, like with any model, we would assume all models are wrong, some are useful. So no model is going to tell you exactly when something's going to hit a peak, or if it does, it might not do it consistently, but we can learn things from each model to help us come to our own conclusions. A lot of these models are they're determined after prior bull markets, so this would be the first bull market, seeing how they hold up. One of the things we can note from this indicator is, well, I should explain what it is. It's the 111-day moving average and twice the 350-day moving average. Okay, so 2x the 350-day and then the 111-day. And the general idea is that when they cross, historically, the top has been within 3 days of that cross. You can see here in 2013, we had a local top before a fairly nice correction. Here we had a cross, a top before a nice correction. And then in 2017, within 3 days, a top before a nice correction. You might say, why is it called pi? Well, if you take 350 and divide it by 111, you get a number that's fairly close to pi. But again, it's twice the 350-day. So what we could say here is, because some of the questions that I'm sure I will get, does a cross, first of all, does a cross mean it's the top? Does not necessarily mean it's the top. We know that it has been at the top the last 3 times, does not necessarily mean it's the top this time. Does it mean it's the market cycle top? Let's assume it is a local top before like a 50% correction. Does it mean it's the market cycle top? Well, no. We can look over here and see there was a cross right here, and it corresponded to a blow-off peak followed by a fairly nice correction down around 75% or so before we quickly recovered and just continued on up for one last surge. So it does not necessarily indicate a market cycle top, because here we had a peak in early 2013 and then we had another peak a few months later at the end of 2013, and I believe this peak was in November, if I'm not mistaken. The very end of November, this peak was. So end of November 2013. We also had a cross in April of 2013. So then that brings us to 2017. We had another cross, and then that corresponded to our local top in 2017. The reason we're talking about this indicator now, we talked about it a few weeks ago when Steve came on the show. They're starting to converge a little bit. Okay. Now, there are no guarantees that they will converge. If you go back to 2017, they started to get close, and then we had a 40% dump, which basically immediately caused the 111-day to sort of come back off this way a little bit because it was reacting. It's a shorter term moving average, so it reacts quicker to price movements. So if the price of Bitcoin does not have a decent correction in the next few weeks, it's possible, I haven't actually done the math to calculate it out, it's possible that we see a cross of these two moving averages. Like if we just extend these out and suppose they more or less stay on the same path they're currently on, we would likely see a cross of these two moving averages. And then the question is, well, does that indicate that we are at a local top within 3 days? Historically, that's been the case. Again, it's never been used in the middle of a bull market to show the local top, but it doesn't mean it can't do it. So it's just one more indicator that we can add to our toolbox to help navigate these markets. So currently, you can see that they're really not that far apart. We'll probably dissect this more in another video, but right now they're only about 10% apart. If you go to, say, the beginning of February, they were about 19-20% apart. If you go to, say, mid-January, so say January 15th, they were around 30% apart. So from 30 to 20 to 10, every 2 weeks or so, you can see these two moving averages starting to converge closer and closer together. In 2 more weeks, they might only be 5% apart. Okay, so we are coming up to a theoretical cross if the price continues to just go insanely parabolic in the short term, because that will inevitably drive the 111-day moving average up and cause it to cross with the long-term moving average. So hopefully this is useful. Hopefully you guys enjoyed this analysis on the pi cycle top. Again, I believe it was Phillip Swift who created this, so shout out to Phillip, and we will see how it fares in this market cycle, how well it comes to predicting a cycle top, as well as the other indicators that we use on the channel. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. Remember to check out the premium list altcoin season sale. You can find a link to that in the description below. If you want access to the weekly reports, videos, Telegram alerts channel, risk dashboard, and more, check that out, lock in the lower rate. Thank you guys for tuning in. Make sure you subscribe. I hope you enjoyed it. We'll see you next time. Bye.